Hi, everyone. I hope you're having a wonderful week. This week marks the continuation of our India deep dive. The last few weeks, we spoke to a unicorn in India, and then we had Luke come on and talk about our thesis about India and the general trends in the market. And today, we're going to be welcoming Nitya, who is hopefully the CEO of a Soonicorn that FJ Labs has been an investor in since 2018. He's going to talk both about his company Simple, but also about everything that's been going on in the tech ecosystem writ large in India, perhaps the impact that the decoupling with China's had, and also the role that UPI and payments have had in India, and why that's unique, and perhaps why places like the US should copy things like that. So without any further ado, let's get the show on the road. Welcome to episode 39, the Indian FinTech ecosystem. So Nitya, welcome to the show.
Fabrice, good to be on the show.
Yeah, it has been. It's been a minute.
Yeah, it's been a while since we last connected.
So why don't you start by introducing yourself personally and how that led into the company you're building, and giving us a little bit of an update on that.
Sure. I'm Nitya, CEO, founder of Simple. Before starting Simple, my background is I grew up in India, moved to the US to go to grad school, ended up spending 10 years working on Wall Street, living in New York. Honestly, never thought I'll move back to India to start a payment company. But around 2015, what I noticed was happening in India was quite interesting, which was one, that it's one of the fastest growing e-commerce markets in the world. That's number one. Second, I had a personal experience of getting declined for a credit card in India just because, I did not have a credit score and everything else that you need to get a credit card. So got declined for a credit card, and I noticed very, very few people in India have a credit card. Even right now, 35 million unique people have a credit card compared to 1 billion people who have a bank account. So sort of noticed the second trend. The third thing I noticed was, despite the fact that India is clearly a major e-commerce market and one of the fastest growing e-commerce markets, but 70% of all e-commerce transactions in India, back then when I started Simple in 2015 and even now, happens with what is called cash on delivery. So let it sink in. 70% of all transactions that happens on e-commerce, people actually pay money at the point of delivery to the delivery agent, right? So that happens. And this is despite the fact that we have in India one of the most sophisticated financial services infrastructures. What that means is that every single person has a bank account. So 1 billion people have a bank account. They all have a way to make an online payment. So in India, one thing that we have that is very unique is, you may have heard about it, called UPI, and stands for Unified Payment Interface. We'll get into the details of UPI later, but it's a way to move money real time, 24/7, with zero cost. So imagine I can pay you 10 cents right now without us anyone paying anything for it. So we have all of that, and yet 70% people use cash. So when I saw that,
why do you think that is actually? Like when you have an extraordinary payment infrastructure, why are people doing cash on delivery?
Yeah, so that's a question I asked, and the insight to the question is simple. The big driver of cash on delivery for e-commerce is trust. People feel safe about buying things online and paying at the point of delivery as opposed to ahead of delivery. Which, if you think about it, if you step back and really think about, okay, well, when I'm pressing a button on Amazon or wherever, the transaction is not complete for me as a consumer, right? Why do I have to pay first, right? So the consumer, sort of like, uses cash on delivery as a way to build trust in e-commerce. And I think it's it's more pertinent in a emerging market like India, is because emerging markets have trust deficit, which is often a big friction to commerce, right?
So I buy that in 2015, but is that still true? Is it still 70% in 2022? I mean, because for when you order from Flipkart or Amazon in India, which obviously are huge, you would think they have trust, or is it still cash on delivery even for them? Do you think it's just like ingrained behavior?
Yeah, it is. It's a combination of ingrained behavior and the fact that, I always say cash on delivery is the best user experience. And because it's offered, people take it. And the reason it's the best user experience, even right now, and whether you are an Amazon or Flipkart or even the largest brands, is because it's one-click checkout. So just for context for you, Fabrice, and your audience, one-click checkout does not exist in India because for transactions online, for every transaction, you need a second factor of authentication. So you would typically have an OTP, one-time password, which is multiple clicks, terrible user experience, and 20% of those transactions actually fail, just like they just don't go through. So you have to try it again, right? So it's just a bad user experience. Cash on delivery is one-click checkout, right? Because it's just like you just press a button.
Yeah, except you need to be there, to give cash to the person. So there is friction on the ex post system.
Correct. Yes, exactly. So that's what I guess our insight is at the point of sale, it's a phenomenal user experience and has a feeling of safety, but it creates a massive friction at the point of delivery where you need to have cash. And really, obviously that's people sometimes don't have cash. And this translates into a very large problem for retailers, which is lot of sales just does not convert, meaning people send back. They may not be home, they don't have money, they just change their mind, right? You can change your mind in 2 days or 5 days and you don't have to buy it anymore, right? So it's a massive problem in terms of operational efficiency for e-commerce in India. And at Simple, that's what we're trying to solve.
So wait, is it still 70% of that's cash and delivery today?
It is very much 70%. And let me give you some statistics. For someone as big as, and as prominent as Flipkart and Amazon, that number would be about 60% right now, okay, roughly. For any smaller merchant, let's say you are a direct-to-customer e-commerce, that number might be 80 to 90%.
Wow, that's pretty crazy.
Right?
I wouldn't have expected that in 2022. Another thing that's interesting, by the way, is the insight that, even though I'm a reasonably well-off Indian, I declined for a credit card in India. Actually, it's led to a lot of ideas in the U.S. because obviously, as foreigners, and you and I both came to the U.S. with no credit history, getting credit cards approved when you have no credit score was also difficult. So it's actually interesting that same problem applies, in other geos, and though the solutions are probably somewhat different. So I hear the issue that you're describing, meaning cash on delivery is the best one-click checkout experience in India, but at the delivery point there's massive friction. Many people don't have credit cards. So what is the simple solution? How do you solve that problem?
Yeah. So at Simple, the way we solve that problem is by creating a checkout solution that basically online retailers integrate through APIs on their mobile applications or web applications. And the solution is, imagine American Express meets PayPal, right? So it's like a button that a retailer can expose to their customer. When they click their button, it's a one-click checkout. But in the background, because of the deep integration with their native websites and mobile applications, etc., it's ultra secure. So we do background two-factor authentication. And then it's like American Express, as in consumers do not have to pay for what they're buying right now. They can just aggregate what they're buying into one bill, like a charge account, which they can settle every 15 days. And on top of that, what the consumer gets is standardized buyer protection features, regardless of which merchant they buy from. For example, real-time refunds. What happens if you don't get delivery, right? While that does not happen often, but the fear is omnipresent, right? Yeah. And with Simple, when you're buying with Simple, if you don't get delivery, you just don't pay. As simple as that, right? So we kind of like have, sort of like build something which is very unique for the market, which essentially solves for what we believe is the two biggest frictions in e-commerce. user experience on checkout, and trust in the post-purchase experience in e-commerce.
And are you doing? I assume for each individual you have to do a real-time credit check, right? Like if I'm a first-time user, do I need to sign up, or just automatically based on my phone number you can figure out the data? This way you can decide whether or not to extend the credit to the person. And then how do you get paid? How do you? I mean, you send them a bill 15 days later, but how does that work actually?
Yeah. So to answer your first question, all the delivery of the product to the consumer happens in real time. So you typically do not have to sign up on anything if you never used Simple. We are so deeply integrated with retailers, and we work so sort of like closely with retailers that we work with a lot of data, and then of course use advanced data science and machine learning to approve consumers in real time. So that's number one. And you can literally sign up with a couple of clicks. Typically takes not more than 15 seconds, 20 seconds at the point of sale, and create an account and make your first purchase. You can then make these multiple purchases over a period of 15 days. So our billing cycle is 15 days. So unlike a credit card, we are not monthly. We do 2 bills in a month. So first 15 days and the next 15 days and so on. So you can aggregate all your transactions. You get a bill at the end of 15 days. It's sent to you electronically. 90% of our consumers end up downloading our mobile applications post the transaction. So it's typically sent to your mobile app. You open it, press a button, payments get made. Consumers make the bill payment typically with UPI.
Okay.
So UPI
I was wondering how they pay. Okay.
Consumers use UPI to make their payment on the Simple bill.
Okay.
And Fabrice, just for context, I think one thing that will be helpful is an average consumer uses Simple about 7 times in a month. And what they use Simple for is their daily purchases. So they buy food online, they buy grocery online, they buy movie tickets online, they buy a flight ticket online, they might read an article on Bloomberg online. So Simple is really, unlike a typical credit product, it's a charge product. It's a little bit like an Express card. So consumers are not consuming credit, and therefore a lot of our underwriting is less focused on credit underwriting or underwriting ability to pay. It's really fraud prevention. How do we essentially identify a consumer online and make sure fraud doesn't happen?
Yeah.
So that's
and the beauty of focusing on things they use on a regular basis and they need essentials is probably things they want to pay for, and so which also makes it less of a credit purchase. So what's your business model? How do you make money?
So we make money with merchants. So merchants pay us a fees per transaction, and they pay us a fees which is about anywhere between 1.75% to 2% for the transaction that happened, and they pay us because we increase their conversions, we increase we reduce the cash and delivery component of their business. Just as a statistic, 45% of Simple users today previously preferred cash on delivery on e-commerce. So we convert people who would otherwise use cash, which is obviously very inefficient and expensive for retailers. That's our core business model. Now,
actually, how inefficient? I mean, we have a comment from one of the viewers saying, "Oh, in Africa, for instance, same thing. There is absolutely no trust, so everyone is doing cash on delivery, even in the very large players like Jumia. I don't know if you know Jumia, which is a massive e-commerce player in Africa. How expensive is actually cash on delivery? Like, if you're the retailer and you're collecting payments through cash on delivery, what would be the equivalent percentage that you have to pay to get the cash back?"
Yeah, it depends on the average order value. But in India, for example, the average order value in e-commerce is about 1,200 rupees, which is about $15, 15. And there it would cost you about 8%. And if you were to try to understand the components of the cost, components are obviously the standard fraud, pilferage, imagine you're a Jumio guy or a Flipkart guy with a Flipkart backpack. Most likely you have a few few $1,000s in your backpack, and people get mugged. There is obviously fraud. People run away with money. But a very big problem is what is called RTO, stands for Return to Origin, which means that you may decline the delivery as a consumer, right? And it could be because of multiple reasons. You're not at home, you don't have cash, you don't have exact change. By the way, one of the bad user experiences that happens often in e-commerce with cash is the delivery agent never has the incentive to actually has an incentive to not have change. Even if they have change, they will tell you no change because imagine, right? You bought something. Yeah, you bought something for $18. You have $20. You say no change, so you'll just give him $20 and he gets his $2, right? So there is all sorts of adverse incentives. So a lot of people it just doesn't complete. And when the retailer has to do RTO, there is reverse logistics, and then the entire cost of repacking it, right? Because you have to label it and stuff, right? So,
but by the way, as you can imagine, 8% is a number that's pretty consistent around the world on how much cash and delivery costs, which of course is extraordinarily expensive. I mean, there are many verticals where the margin is not that high. You can't really afford that.
Yes, I often say this. Cash and delivery is the original sin for e-commerce in emerging markets, and you can't. It's impossible to scale e-commerce with cash. Yeah. And again, the problem is not that people don't know how to use electronic payments. The problem is trust. And therefore, the solution is not, new payments infrastructure, new payment instruments. Solution is build something that overall builds trust, right? So that's sort of like what...
A few questions. What happens if someone doesn't pay you, doesn't pay after 2 weeks? I guess obviously you cut them off, but the thing is, if you're a take rate, or whatever, you're taking 1.7% for the merchants. If you have 1.7% delinquencies, you're out. You make no money. So your underwriting has to be absolutely epic. Yeah,
it has to be very, very tight. So to answer your first question, if somebody does not pay, nothing really happens to the consumer except they can't use Simple anymore. So that's the only reason. So that's number one. Now, we are working with retailers to create more incentives, positive and negative incentives for people to behave in a trustworthy manner. Things like loyalty rewards that are given to people who demonstrate high trust behavior, certain extra features like no questions returns, etc. If you demonstrate that type of behavior. And really the root of this business, Fabrice, is that, and this is what we see in our data, for new customers, meaning somebody who's never used Simple, you have to be open to taking slightly higher level of non-payments. And we think of that as almost like a cost of customer acquisition.
Yeah, I can imagine it as customer acquisition cost, basically.
Yeah, especially because the transactions, you're talking about small transactions. You're talking about $10 transactions, right? Yeah. So the maximum you'll lose is $10. And if you lose it on 5-6% people, it's obviously a loss, but it's a pretty efficient cost of customer acquisition in consumer internet, right?
Yeah, that actually makes sense. Though I assume most of your CAC is kind of zero. I mean, indirectly, right? Like you're doing a deal with the merchant, then the merchant puts you in the checkout, and they bring the end consumer. So for you, the CAC is actually the merchant CAC of signing up the merchant.
Exactly. So that's the only CAC we have.
And how hard has that been, actually? Because I think if the pitch is we help you increase your conversion rates, it's probably a pretty good one.
Yeah. No, it's a good one. But one of the hard things, as you know, from building marketplaces, Fabrice, is building new marketplaces or networks is incredibly hard because you have the classic chicken and egg problem. Yes. Who comes first? I often say this, for us, it's clearly the merchants, and we are very much like a merchant first, empowering merchants to be consumer centric platform or a network. And for me, I often say this, the first 100 merchants are impossible. The next 1,000 are very, very hard. But the next 10,000 is slightly easier. It's been a grind getting to the first 100,000. Thankfully, today we work with 26,000 merchants, so we've definitely crossed the chasm. But
Give us a sense of scale, whatever numbers you're willing to share in terms of like general payment volume that's going through your platform, just so I get a sense. Whatever you're willing to share that shows how big you are or you've gotten.
Absolutely. So we today work with about 27,000 online merchants. We work with some of the largest internet companies in India now, folks like Zomato. Zomato would be the DoorDash of India. Make My Trip would be the Travelocity of India. Dunzo, Blinkit, Big Basket, they would be like the Instacarts of India, Zepto, and so on. So we work with some of the large ones. We also work with a lot, by the way, we work with Geo platforms. Geo is by far the biggest internet company in the world now. So we work with Geo platforms and several other very large internet
But
companies.
not Flipkart and Amazon.
Not yet. So we do not work with Flipkart and Amazon, Uber and Ola yet, but totally working towards working with them. And then we work with a lot of smaller retailers. So that's one thing. The second is we have about we do about 5 million transactions actually no, the numbers are growing, so about 8 to 10 million transactions a month. It was 5 million just 3 months ago, I guess. 8 to 10 million transactions a month. So doing a fairly large scale. We have about 4 million active users, very sticky user base. An average customer does roughly 7 transactions a month with Simple, and so on.
I mean, that's really impressive. Well, hopefully you'll be a unicorn as a result of that in the coming years. How do you fund the cash that you're advancing? Is that a line of credit, or like how does the cash flow cycle work? Because someone's buying, you need to front the cash, no?
Yeah, no, totally. And that's a very important and a sort of like complicated part of business. So we create a working capital pool, which is essentially a securitization. So it's a quasi-securitization where we work with an investor who would basically invest based on the cash flow of the assets, and the assets being the invoices. Because and so it's a very interesting innovation we have done. We have used sort of this classic securitization that as you know happens in mortgage-backed securities and credit card receivables. So we have kind of like used that technology to a very different use case to basically discount and create a securitization out of these invoices, and we have investors who participate in it. It's a very interesting asset class for those investors because it's a very interesting asset class because one, it's a very diverse pool of millions of consumers, first of all, right? Yeah. So it's not like very concentrated on like 10 people or something. One goes off and the whole thing goes up. You have millions of consumers. It has a very quick data cycle. Every 15 days, how is it performing, right? And so, it's a very interesting.
And have you been able to decrease the financing costs over time with like more data, more scale, etc.?
Yeah, we have been able to decrease both the financial costs, the financing cost, and what is called the advance rate.
How much capital you need to put in as well.
Exactly, right. So, for example, like 18 months back when we did our first warehouse line, or 24 months back, it was at 18%. Today, it's about 11%.
Most of our FinTech companies kind of follow a same pattern. Like they start by going to wealthy individuals and family offices, and in the U.S., even in the U.S., they'll pay 15%. Then and that's for $1 million line of credit. They've grown, they haven't had too many losses. It's like 5-10 million line of credit. They go to hedge funds, they pay 12%. Then they get like their first bank line of credit for like 50 million, and it's like 9%. And then finally, they're big enough and they get SVB to give them 100 million at like 5%. Obviously, I wouldn't expect those numbers in India from a rate perspective, but it's great to hear that you've been following down that very similar path.
Yes.
So, question for you. So I go to the checkout of any of these sites in India. by number one option, as I'm hearing, 70% of the cases is going to be cash and delivery. Is the number two option simple typically, if simple is an option, or do people just do direct UPI payments or credit card? Like, what's number two here?
Yeah, in typical website, the number two would be either simple or UPI. UPI would be either the number two after cash or right after simple, and depends on the use case. So UPI is actually a very big payment option. It's a great user experience. It does not solve for some of the things around. It's just direct debit, right? So you just give someone money, and if something goes wrong, then you have to work with them. So therefore, UPI. So one easy way, Fabrice, to think about UPI is like ACH.
Yeah.
So real-time ACH.
It's an ACH. It's like Pix in Brazil. So actually, why don't we talk about UPI a little bit? Like, when was UPI introduced in India? What did that, how did that come about? and what, if anything, did that change? How long did it take to scale? Is it C2C? Is it B2C? Both? Is it B2B? I think it'll be helpful for people in the US who are not used to that. And actually, it's crazy. In the US, we're paying I call it the Visa MasterCard tax, where of like 2% on everything, or 3%. And in fact, a big chunk of the neobanks and the financial infrastructure is built on interchange, which at some point should go to zero. Now, when that is, probably not the next 5 years, perhaps not the next 10 years.
Yeah, no, it's built on both interchange and this misalignment between consumers and issuers of cards, where issuers want consumers to revolve, whereas revolving is the worst financial decision for a consumer. So yeah, we very much believe that will be disrupted. Coming back to your question about UPI, to understand UPI, I think we have to step back. It is part of a very broad infrastructure effort that was really sort of like driven by the government of India, and I think it's probably started around 2012 in what is called the India Stack. And India Stack broadly has 3-4 pillars. The first is a digital identity for all, right? So you may have heard of what is called Aadhaar, AADHAR. So what Aadhaar is, like US Social Security number, SSN, except it is everybody in India now has it. Like, I think more than 1 billion people have it, right? It's unbelievable. And the cool thing about Aadhaar is it is one digitally verifiable, even remotely, meaning I can prove to you who I am without sort of like any third party, just through a sort of a consent mechanism, right? Yeah, it's a very cool and interesting.
And what can this be used for, actually? Because again, like it's shocking that how far behind the US is in terms of like having unique digital ID that you can use for other things. Like, I go to Estonia, and you can use your social security number and password, and boom, you can vote online, you can pay your taxes, you can have your medical records, you can see school records, etc. So what can you use that for in India?
Yeah, so you can use it basically for all purposes. Digital identities are. So open a bank account. When you have a job, you kind of like give it to your employer. While filing taxes, you have that. For all these type of purposes.
And you can do all these things online.
Basically, yes.
Okay.
Yeah. Today in India, you can open a bank account literally on a mobile app right now. So you can use
even with the main banks, not just the neobanks.
Correct. Yes.
Yeah. I mean, I think that's what's unique, right? Like in the US, yes, Chime will let you open a bank account easily, but if you're going to Citibank, the amount of paperwork you need is like mind-boggling.
Yeah. So the first is the Aadhaar. The second is what is called universal banking. In Hindi, they call it Jan Dhan Yojana. So basically, I don't know if it is a right, but it's almost close to a right that everybody have to have a bank account, right? And today in India, I think we have more than 1.1 billion bank accounts. So every bank account is linked to an Aadhaar number, right? So if an account, so the digital ID is
absolutely
linked to, so the second part of it. The third is
which means, by the way, that there are no monthly fees then on having a bank account. Otherwise, you wouldn't have 1.1 billion people having them.
exactly, yes, there is the
Okay.
yeah. I mean, I think monthly fees are, even my bank account doesn't have a monthly fee, let alone like a basic bank account. So
Cool.
that's a not a thing in India.
Okay, second
And
pillar.
then the third is of course UPI, but I'll come to UPI last. The fourth is something that is sort of in the process of rolling out, what is called AA, account aggregator, which means that it's almost like, imagine Plaid in the US as a public infrastructure. So you have a way now to pull all information from any financial services account you have, whether it's just broking account or a bank account or a credit card account or whatever, and you can basically consent and give somebody else your data, right, through a consent mechanism, right? So very interesting. It's very new, so it's not taken off just yet, but I think in a couple of years it'll be like UPI. And then of course, as I said, as we talked about UPI. UPI is very cool and interesting because obviously it's real time and moves between bank accounts and every single person has it. But in terms of the product design, it has innovated on the fundamental flaw with the credit card, which is the 16 digits on a card. Is it a public key or a private key is the question, right? So you kind of like put this 16 digits on the internet, right? That sounds like pretty silly because, anybody can steal it and like basically steal money. So, obviously this whole infrastructure, Visa, 16 digits and stuff was built in the 1950s and today we have the internet. So what UPI is, first and foremost, has two keys. One is a public key. It looks like an email address. So it's very much like an email address. So I can give you my sort of like, hey, Fabrice, can you send me $100? Here's my ID, and my ID would sound something like Nitya Sharma at my bank name, HDFC Bank, right? Something like that. And then what you can do is or what I can do is through my UPI application, which is basically embedded inside every bank application. Google has it, Facebook has it, a bunch of people have it. I can send you a request if I know your sort of also your UPI ID, like almost like, hey, Fabrice, you have to pay me $100. So you can kind of click on that link.
Is it in WhatsApp, by the way?
It's on WhatsApp as well, yeah.
Because that makes it quasi, like WeChat or in China from that perspective. Yeah.
Exactly. And all you have to do on your end is put in your private key, which is your password. So the request will come, the public key is public key, everybody can have it, there is no security flaw. And then whenever somebody has to push money, you have to put a, 4-digit code or something. So that's what UPI is. And the moment you do it, the money literally lands on my bank account as fast as a WhatsApp message.
Yeah, it's real time.
It's real time.
Yeah. I mean, imagine if you're in the West, if I send a wire to someone, it might take 3 days for them to get it, plus the $15, et cetera. And ACH, same thing, couple days. This is like real-time ACH. It's free to the consumer. If I'm a merchant and accept UPI, how much do I get charged?
And the interesting thing about UPI is UPI is free. So you don't get charged anything if you directly work with banks. So large retailers work with banks, and so besides the basic service fee they may be charging, it's free. It's a free.
So it's not even 10 basis points or 30 basis points. It's zero.
It's zero. It's zero.
I mean, obviously it's revolutionary because, to your point, we can do microtransactions. I can send you 10 cents. I can send you 1 cent, which is something that's absolutely not possible in the U.S., where you have like a minimum 25 cents fee on my credit card. It wouldn't just not be cost effective.
Correct. Yes. That way it's just mind-bogglingly advanced.
So this was introduced when did UPI launch?
Yeah, so UPI, as I said, all these things were work in progress starting 2012. I think UPI probably launched in 2015 or 16. If I get my dates right. Obviously, in the first couple of years, just like not every bank was on it, the infrastructure was very broken and so on. But for the last 4 years, I would say it has just taken off like wildfire. And it's huge.
Yeah, and is it used also for B2B payments? Like do companies, can they pay each other through UPI as well?
Yeah, anybody can pay. Like, it's peer-to-peer. It's peer to merchant. It's B2B.
It's completely revolutionary. It's basically you're a brand new real-time free payment system. Were you worried, by the way, when this was being developed, that like, oh, maybe people are not going to want simple if trust starts building on its own because they're buying from Amazon, or like, did you have that in the back of your mind, or not really?
We definitely had it back at the back of our mind for sure. But at the same time, I was very excited about it. I'm still am, and we use UPI a lot. The way I think about UPI, Fabrice, is UPI in itself is an infrastructure, and that is the exciting part, right? The way I think about it is moving money is a solved problem. You can't make money. There's no value to be added to move money, and that's what UPI does. And by the way, credit cards also do that. But in e-commerce, there is another problem. And as we said, building trust, again, for Amazon is easy. By the way, even Amazon, I think 50 to 60% of Amazon transactions are in cash. So even Amazon struggles. But, what we see happening in India is e-commerce is obviously getting a lot more decentralized than it has been in the past. So with direct-to-customer e-commerce, all marketplaces being more verticalized and so on, consumers are no longer only buying from one place like Amazon. They're buying from a lot of places, which is where standardization of that trust layer is super important. And that's what we are building, the standard trust layer, the user experience layer, using UPI as the infrastructure layer to power our growth.
It's interesting. It's interesting that this was government-led, which led to then the banks adopting it. It'd be interesting if someone could do the same thing in Western Europe and the U.S., and ideally both simultaneously with the same system. That would be pretty epic, because the cost structure of payments just makes no sense in the West. So what has having micropayments and zero cost payments allowed that wasn't allowed before? Like, what are the really cool new things that have come because UPI exists?
And this is the interesting thing. I'll just make 2 points, Fabrice. You just said, it'll be very interesting if it happens in the West. But I think what is exciting about markets like India and so many emerging markets is when something doesn't exist, there is such a vacuum that you see a leapfrogging. And in India, we saw this with the mobile revolution itself, right? No one had landline connections, and then everybody has a mobile phone with $10, 4G, high-speed, unlimited data, right? And people still don't have clean water to drink, right? So it's quite exciting and interesting how infrastructure and technology leapfrog and allow you to leapfrog. Now, coming to UPI, right? I mean, like we all agree, it's a breathtaking infrastructure. Obviously, people pay each other. If I have to pay you anything for dinner or go together, we can settle very easily. Yet, 2-3 things. One, as I said, e-commerce, 70% still cash. Second, there is no such thing as subscriptions in India, right? Imagine this, sitting in US right now, half of your e-commerce is probably happening on subscription, right? You've kind of like put your card somewhere and, your Netflix is being charged and your Spotify and this and that and e-commerce, a lot of e-commerce and subscription. In India, there's absolutely no subscriptions, right? Again, because UPI is an infrastructure.
Yeah, you have to enter your PIN every single payment. So every month you'd have to go in. I get that.
Yeah. So there is no subscription, and similar type of use cases where there is absolutely zero friction, where settlement and the money part is just taking care of the background, right? It's very much in the foreground. So I mean, like I think that said,
does Simple allow subscriptions?
We power subscriptions.
But the question I asked though is, are there any unique new, perhaps unexpected, and as in they don't exist in the West, etc., applications that came of the fact that now you have real-time settlement and or microtransactions, or like people selling things for 3 cents that weren't being sold before? I mean, I'm making it up. It'd be interesting to see like what has emerged as a result of this.
So what has definitely emerged is that acceptance of digital payments in the most grassroots level has. So which means that you could be a person literally selling, I don't know, something very basic on the street, like let's say coconut water, right? For like 50 cents. And you have a QR code hanging from your cart, and I can buy this couple of coconut waters for like 60 cents and pay you with that QR code.
Very similar to Alipay and WePay then.
Yeah, no, totally. That something like that you would see a lot. You can imagine, right? For a person like that who's let's say have a cart and like coconuts on it, accepting Visa cards is impossible, right? You can't have a machine, and like how expensive it would be, and like who would even process your payments with UPI? I mean, like, yeah, people are.
Right. What percentage of people would be paying like that versus cash? It'd still be a minority right now.
Yeah, still be minority, but people do, and I think a lot of those things are actually happening with cash quite a bit, because or with UPI quite a bit, because in a physical transaction, let's say I'm buying coconut water from you or a T-shirt from you, there is no element of trust that we need to sort out. I have coconut water in front of me. I can pay with cash or UPI, and both are equally, easy.
Yeah, they're considered interchangeable. UPI is cash, basically.
Yes, UPI is basically that's right.
Digital
UPI
cash.
is it's just digital cash, right? And it's not reversible. It's a one-way transaction, and
it's USDC with a better user interface, much and lower costs.
Yeah. Exactly. Yes.
Yeah. So how long were you in the US before you went back to India? By the way.
I think I spent about 12 years in
12
US.
Years. So how big was the adjustment when you first came back? And because obviously now ex-post, I'm sure you're like, oh my God, this is the best decision I've ever made. But you can tell us, right?
Yeah. When I first sort of moved, it was almost like I did not move it because I did not have a very high level thesis about India, or like, hey, I have this, massive thing I'll do in India. I kind of got really fascinated by a question, Fabrice, which is, in a place like India where credit cards don't exist, but today's technology does, and this e-commerce is booming, there is perhaps this new opportunity to reimagine a Visa, right? That's how we think about it. What would a next Visa look like, right? Which is a network. So if you think about Visa, right? One, it's obviously very old and started 70 years ago. And very importantly, one of the things that Visa and most payment networks have an issue, I believe a big problem is that they are very bank first. Their main customers are banks, issuers. Whereas we feel very strongly retailers and consumers are marginalized by payment companies. So I kind of felt there is an opportunity to reimagine a Visa as a network of retailers. And so so to me that was pretty exciting. After I'd spent 12 years in the US, out of which 10 years were doing a job on Wall Street. Had a great job, loved it, fairly successful. And I was looking for my next 10-year adventure, and I was very clear it's got to be multiple folds better than my previous 10 years, which were really good. And when I kind of like felt very strongly, this probably sounds like very likely to not be statistically likely to fail, but if worth trying to build the next Visa. And I got pretty excited about it and sort of said, let's do it. And I moved back to India. I never thought again.
And where did you move to?
I first moved to Mumbai, which is where we started Simple, and first 2 years of Simple, and then I moved to Bangalore, which is where Simple is based now.
Okay, and that transition, New York to Delhi to Mumbai, and then Bangalore, wasn't too hard in the early days, or?
No, it wasn't. It wasn't. I remember telling my friends back in the day who used to ask me the same question. I used to say, look, imagine New York in the 60s on crack. Yeah. So it is like fun, very edgy, cool, melting pots, really smart people. I quite enjoyed it.
So if I'm not mistaken, I mean, obviously there were like ups and downs along the journey. Like if I think at some point India completely shut down during COVID, and like your volumes were down like 80%. Like how did you navigate that? And how did that look? And how has that helped you perhaps make you stronger in the end?
Yeah. So, as I said, right, in this journey, we've had three very important turning point, which could have broken us, but we, I think, emerged stronger. The first was, as I said, the first 100 merchants are really impossible. Like, who would work with a payment company where you don't have anything, right? And you have this thing. So, it was quite a struggle, but we got through. Then, as you can imagine, in this business, once you have the 100 merchant, your network sort of starts getting going. One big problem to solve is fraud. They're just like PayPal, right? And the way to solve this fraud is there is no available things you can use. You have to build your own things because you are fundamentally building your own infrastructure. So we kind of like worked a lot on building seminal technologies and infrastructure to be able to handle that volume and do it in a way where the fraud rates are minimal. And then, yeah, I mean, the COVID was again. We right around COVID, we were just taking off again, and yeah, Indian government shut down the whole country for obvious reasons, and our revenue and GMV, TPV, total payment volume, dropped 90% overnight, and it stayed at that level for almost 3 months, 3 to 4 months, and yeah, a lot of our merchant concentration was also in areas which got really impacted by COVID. Things like movie tickets and things that are around going to office and so on, because people did not do those things for a long time. But yeah, no, we sort of like, but at the same time, as we all know, COVID was a big boost for e-commerce, and especially in India, cash was for the first time thought of as dirty. Right, because when you are exchanging cash with the person during COVID, there is higher chance of COVID being transmitted. So that was good for us, and people thought of as a perfect replacement for cash. And yeah, we took off, and yeah.
That's really interesting, actually. That people were like, oh, we should be using electronic payments. It's way safer. Didn't think of that as an upside, but it makes a lot of sense. So what's your take on like where the Indian tech ecosystem is today, and in general the Indian FinTech ecosystem, and what are you excited by, and what's next?
Yeah, I think the exciting part about Indian tech and FinTech, both ecosystems, is that we have, as we discussed, like let's say in FinTech, these fundamentally new infrastructure, right? UPI, Aadhaar, and then a lot of companies that exist in the US, like let's say Plaid. In India, it's a public API. It's open. Yeah. Anybody can come and use it for free, almost, right? And so it's very exciting. Obviously, the consumer is still very underserved, and people still don't have great services, quality of experiences, and so on. So I think there is a lot to do and a lot already happening. What I fundamentally believe that is going to happen in India is not sort of like a replica of what happened in the US, right? I think a lot of times there is a tendency to sort of like say, in the US there is buy now pay later, so let's start buy now pay later in India. In US there is neobanks, so let's just start neobanks in India. I don't think that approach works, because fundamentally there are new things in India, and so you have to kind of like ask the first principle questions. Hey, what is there here that does not exist in any in the world? What are the fundamental things consumers need or businesses need, and how can you leverage the infrastructure that is here in a unique way to provide world-class, phenomenal digital-first user experiences? So I think that's a exciting possibility. This is true for other tech as well, right? So, one of the other things in India is, I remember when I used to live in New York, my AT&T connection used to cost $140 a month for, unlimited internet and so on. In India right now, it's $10 a month for me. And it's like 4G, 5G, whatever the fastest G is, unlimited internet, unlimited calls, and obviously everybody has it. I'll give you another statistic. In India, the penetration of e-commerce as a percentage of all consumer retail is only 5%. When you compare that to US is at, I think, slightly around mid-20s, and Europe is in mid-30s, right? So India is 5%, despite the fact that the delta of the user experience you have in a physical commerce experience in India versus e-commerce is wide. In e-commerce, you can get everything. Everything is there. It's a great price. They deliver it to you really fast. It's there.
The upgrade from the corner merchant to Amazon and Flipkart is significantly greater than the upgrade from Best Buy to Amazon. To your point, internet penetration and commerce penetration should go from 5% to 25 or 30% in pretty record time in India. I totally agree.
Yeah. So that's, we are very excited about all of those things. Also, two things, right? I think, given we are in this sort of like this little bit of a recessionary or not the best capital market environment, thankfully, compared to other decades, India looks quite a bit well positioned over the next 10 years at a very high macro level. Our foreign exchange reserves seem solid. Infrastructure is, India has been, the biggest problem in India still is and has been infrastructure.
Yeah.
While there is a lot to be done, it has actually improved quite significantly in the last, let's say, 15 years.
Is that better governance? Is it like private enterprise building their own infrastructure because they can't rely on the government, or a little bit of both? Or
I think it's a little bit of both. Definitely, the government is very infrastructure focused.
Okay.
It's definitely so that's there. Obviously, there is private enterprise and there is a free market and so on. So yeah, I mean, all of those things are happening, and it's pretty exciting to see what will happen in the next 10 years.
That's really cool. I'm extraordinarily excited about the future of India, and even more so with the movement of the supply chains, in away from China to India, where China is actually India is becoming now a bit massive manufacturing hub for many of the Western manufacturers. So it makes so much sense.
Yeah, no, I think that's as you know, Apple is now building iPhone 14 in India, and so many, and then of course with Chinese sort of all the other stuff there going on there. India is quite interestingly positioned, and as long as we don't fuck it up, I think we should be good to go.
What's next for you and for Simple?
For us, we're just trying to just like put our head down and just like keep on focusing on building what we are doing. We've found a phenomenal product market fit. One of the things that is really exciting to us, which is great timing for us right now, is if you compare Indian e-commerce with the US, Indian e-commerce really started in 2010. And before that, there was no e-commerce versus US in 95. So a lot of things in India are playing out. And one thing that is really playing out that is very beneficial to us is what I call the decentralization of e-commerce. Meaning, if 100% of e-commerce was on Amazon and Flipkart 5 years ago, today a lot of e-commerce is on direct-to-customer e-commerce.
That's true globally, by the way.
That's true globally, and India is just following suit.
Is there a Shopify equivalent in India, and are you in their checkout?
Yeah, so there is Shopify itself, and we are on the checkout, and then there are 10 other Shopify equivalents of mobile first and this first and so.
Okay. Well, cool. So basically what I'm hearing is for Simple, more of the same, which by the way is probably the right call because you're at 5% e-commerce penetration going to 25 or 30, so you can, and your own penetration of overall payments can increase. And so you could be 10x, 100x bigger than you are just in India. So, why go to whatever Pakistan or other geos when you can do this? And why do other payment products like Buy Now, Pay Later when this product actually meets a need in terms of subscriptions, direct payments, etc., that people already have? So that would probably be my intuition as well. Like, just keep doing what you're doing and scale and keep crushing it.
That is exactly the game plan.
Anything we didn't cover that we should have covered?
No, I think we covered quite a bit of ground there.
Perfect. Well, thank you for coming on the show. This is absolutely amazing for you to come on. We've learned a lot. I'm so impressed with what has happened in India, right? Like 15 years ago, India looked backwards in a way in terms of payment penetration, exits, commerce relative to the scale of the country was underperforming. And today, it's kind of like at the forefront of so many of the other trends. And there's so many things that India is doing that I'm like, oh my God, I wish I had that here in the US. It's like ridiculous that, we're paying $150 a month for internet access and mobile when it could be $10 unlimited. The fact that we have to pay the Visa, MasterCard fee on everything versus you could have real-time instantaneous payments. I mean, I don't think it's going to happen anytime soon in the US, sadly, but I'm very happy that it's happening in India, and I'm extremely bullish on India for the decade to come, and I'm very, very bullish on Simple. I actually think it will be a unicorn. And thank you for coming on the show.
Thank you for having me, Fabrice. Great chatting.
Thank you, everyone. I don't know when the next episode will be, probably in a few weeks. I'm toying with the idea of doing a Ask Me Anything and answering whatever questions you may have on the world, macroeconomics, philosophy, etc. But if not, I'm open for ideas of what we should be covering next. Thank you for coming.